It is our survey of supply managers in 9 states. That index, while it's down for the second straight month, Cindy, it's still strong, much stronger than what we're seeing at the national level. Of course, that's good news, but it is slipping, and that is concern. In other words, the real strong regional economy that we got the first half of the year appears to be weakening, or at least softening, and I expect that to continue a bit, but still the numbers were still pretty good for the month of July. So I don't see a double dip, anything like a double dip, what we call a double dip recession, or a return to recessionary economic conditions. We're out of it, but of course still not as strong as we'd like to see.
What about the employment? I mean, it still looks pretty good?
Employment looks good. The supply managers that we surveyed, we asked them about current conditions. They were hiring for the month of July. We asked them to look out 6 months and tell us about hiring over the next half year. They were much more positive in July of this year than they were last year in November and this year in January. So that's good. In other words, the percentage of supply managers expecting a pullback in hiring, much smaller. Expansions were much greater, so all that's good. Although again, we're not seeing the hiring we'd like to see. But if you compare this part of the country, then that's the 9 states stretching from North Dakota and Minnesota in the north to Oklahoma and Arkansas in the south, the growth there is much better than what we're seeing in the rest of the nation, and it's showing up in our survey. But again, we'd like to see, I'd certainly like to see, and business folks would definitely like to see better growth out there and more job growth, but just not seeing it right now. And a lot of it has to do with uncertainty. And again, what's going to happen to the Bush tax cuts, the so-called Bush tax cuts of 2001 and 2003? Are those going to be renewed? I think Congress really needs to settle that issue and tell the rest of the nation, tell the rest of the globe what's going to happen to those tax cuts, so business decision makers can decide about employment levels and other decisions.
And that uncertainty is really evident in the business confidence index.
Boy, the confidence index took a real tumble for the month of July, Cindy, and again, a lot of the bad news, of course, is out there, or at least I shouldn't say bad news, it's just not as good as what we saw earlier in the year. Earlier in the year, we were looking, this was shaping up to be what we call a V-shaped recovery. In other words, came down for the recession, back up. Now it's like came down, back up, now flattening out. Of course, I call that the square root type of recovery. If you remember that from your high school days, a square root, if you think about that square root, or what we call the radical sign. Not good, flattening out, growth. But again, that's in employment. You look at the other sides like new orders, inventory levels, sales, production, all those numbers are good. It's just hiring is not as good.
Now you looked at inventories, and you said not of inventory does an economy make.
Right. You know, Cindy, there's a lot of what we've seen quarter one and even into quarter two and now probably into quarter three is inventory rebuilding. In other words, companies had really brought their inventory levels down and as a result have now begun to rebuild them. Well, you've got to eventually begin to increase your sales. Sales growth, the growth numbers have not been as strong, and we've got to see this consumer kick in and buy. And there's consumers right now are saving more, and of course, long term that's good. But in this short run right now, we need to see the consumer begin to buy. We need to see the housing sector turn around. It's looking a little bit better, but housing is still one of the weakest parts of the regional economy and the U.S. economy.
Were you surprised by the amount of the decline in the inflationary pressures?
Absolutely, Cindy. Our price gauge is down. Last month for June, it declined at a significant amount. This month it declined again. So inflation in the pipeline, that of course is good news in the sense that we're seeing less inflationary pressures. Gives the Fed more room to keep rates low, and I think they will keep rates low. Probably won't see a rate hike from the Fed for this year, 2010. I think the Fed should begin raising rates now in the fourth quarter. They're not going to do it. They're much more concerned about the economic downturn, and I guess justifiably so, but I think to really head off any significant inflationary pressures that we might see we're likely to see in 2011, they need to begin raising rates right now.
Anything else?
Well, I think the real issue is not so much inflation, although I think that's going to be a problem. It's price bubbles. I mean, look what's going on in agricultural land prices. Look what's going on in some of the commodity prices, certainly that supply managers are telling us about. Although, again, it's down a bit, but still the Fed has got to move on that. They've got to move and not have another bubble. We've had several bubbles now, and we see what happens when you have a tech bubble, what happens when you have a stock market bubble, what happens when you have a housing bubble. And now we've got farmland price bubbles again building and brewing, and that's an issue. We've got gold prices at very high levels. We've got the dollar, which has strengthened a bit, but I think the dollar is going to be heading lower again. Of course, that's good, but not good on the inflation front.
Anything else?
Well, I think the trade numbers were just not good for the month of July, and that's a real concern. That's, in fact, of all the concerns from the July survey, that would be my biggest issue going forward, is the new export orders were down just slightly above growth neutral. Imports were down as well, and of course that's an indicator at least that this recovery is softening a bit, weakening a bit, and that's what the overall, to summarize, the overall survey, the survey for the month of July shows an economy that is growing and likely to continue to grow, but the growth in the second half is going to be slower than the growth in the first half.